Hey everyone, today is Thursday, October 1st, new month, and this is a daily market recap for the trading day today. And we saw a lot of indecision again today and just not really any clear direction. So we're lacking direction going into the beginning of the month. And as the title of the video suggests, is this a new month, a new sell-off? I potentially think so. Again, I've been very bearish. If you've been tuning into these videos, make sure to like and subscribe. You'll be notified on any future updates, but if you've been tuning in, you'll know that I'm still very bearish. I am a little cautious though. I have been scaling into some shorts on SPY and QQQ, but we definitely are in for a bumpy few weeks ahead. So in today's video, we're going to discuss the potential of a sell-off. I have some bearish indicators I want to share with you guys that I've identified, and we also saw that Bitcoin and crypto saw a huge plunge today. Just taking a look at the charts here, you can see that we fell off a cliff midday. First oil fell off a cliff and then Bitcoin fell off a cliff, but that had to do with the US charging BitMEX cryptocurrency executives, and we'll dive into that in just a second. But before we dive into that, I do want to just highlight the economic data for today. So we did have a beat in terms of the jobless claims. So we were expecting, we had 873 last week, and we were expecting 850, and we came in at a beat at 837. So definitely still troublesome. It's still a little concerning considering so many people are filing for unemployment and we're seeing more permanent layoffs in the space, in the job industry. And some other articles I wanted to share with you folks. So we did see that this could force up to half of New York City's restaurants and bars to close for good. So that's a very bearish headline. I also saw quite a few headlines today about how to prepare for market crashes. So we definitely see that there's some growing concern in the market, and they're definitely trying to instill fear, in my opinion. And let's just take a look at the fear and greed index. So we are in fear mode again. So we were neutral there today, but we're back into the fear mode. So tomorrow we have the jobs numbers as well. So that's going to be important for September. And like I said, we saw some more permanent layoffs, and we're sitting around the same in crypto right now. But we did see some more layoffs, permanent layoffs. So I think it's potentially going to be very bad, especially with seasonal jobs ending. And just a quick update. So Pelosi and Mnuchin did try one last shot at a deal. And you can see that spokeswoman in the White House says Pelosi is not being serious in talks on the coronavirus aid. So essentially she wants 2.2 trillion. And the House will not accept anything above 2. Basically, the 2 trillion number is just an absolute deal breaker for them. And this could potentially be delayed until tomorrow, and then they'll vote in the House. We'll have to wait and see how this develops tonight and into tomorrow, but certainly not looking great. And we saw oil dropped over 5% on weak demand outlook and higher OPEC supplies, which we'll dive into the chart there in just a minute. But one thing I wanted to highlight as well was that US charges BitMEX cryptocurrency executives with violating Bank Secrecy Act. So that is why we saw this huge sell-off midday in crypto, in my opinion. And we've rebounded nicely. We did find support on Bitcoin at 10,500. So we'll see how the bulls can hold that going into this evening now that the stock market is closed. But again, I don't think that's going to tank Bitcoin. I don't think it's going to make it drop, 20 or 30% or anything, but couple that with any market weakness or any weakness in gold, and that could potentially be very troublesome for the leading asset in the crypto space. So there are the articles there for you now. So taking a look. So again, we have the Friday jobs report tomorrow, which is for September. So all eyes will be on that report. And taking a look, just a reminder that we did start a new month here today on SPY. So you can see we had a bit of an indecision day on SPY. We had a red day ultimately, and we are down here a little bit after hours. So we closed green but we're red here after hours. Take a look at QQQ. QQQ is still green, but flirting on the edge of going red on after hours. So taking a look at SPY on the monthly candle, you can see that we are starting off red. So again, new month, new sell-off potentially. October has not been the greatest. I think the two worst market crashes, you can Google it, in 1929 and in 1989, I believe. Those were the two biggest market crashes, and they both happened in October. Again, not trying to spread fear, but just know that nothing goes up forever, and we could potentially see the tides turn again, and you need to be ready for what's coming. Taking a look at QQQ on the monthly, we did close green, so certainly leading the gain train as usual with the tech sector. But again, we're not really seeing much. We're not really seeing much in Apple and in Tesla, which is a bit odd to me and is certainly notable. And I'm keeping an eye on that. But taking a look at SPY on the weekly, we did negate that potential bear flag, so we could potentially see an EQ form. Just depends when this bounce tops out. But on the daily, you can see that we haven't really formed a convincing daily high or low. So I'd like to see us at least back test the EMA 12 period, or a potential even fill that gap down here on regular trading hours. If we can fill that gap, that'll make this move more healthy. And in my opinion, I think that would be better for the bulls. But right now, this is again why I'm remaining cautious. And we can basically just expect a weekly lower high and a daily lower high once this move tops out. Taking a look at the hourly. So the hourly chart in an hourly uptrend into the end of the day. So that's a good sign in favor of the bulls. And into the end of the day, we did see some profit taking. A little bit of uncertainty with the jobs report coming out tomorrow is likely all that is. Taking a look at QQQ on the weekly. So again, bear flag has been negated. Taking a look at the daily. Again, we did change the daily trend though back here with this convincing higher low and higher high, but we haven't formed a higher low since all the way down here at 261. So definitely going to be expecting some healthy consolidation at some point very soon. And hourly is probably in an uptrend. Yes, it is. So hourly uptrend into the end of the day. Everything looks good for the bulls in the short term. Increasing bull volume in the end of the day. So we'll see how much the tech sector can pull the market up. We saw that oil was very weak today, so that pulled the energy bulls down. We did have a 5-minute inverse head and shoulders, which I called out in the group. And again, if you don't have a trading group that you're trading with, you can check us out at pursuitofwealthgroup.com or powgroup.ca, and you'll be able to join in on those conversations. But essentially, I gave this heads up well in advance that we could potentially be seeing an inverse head and shoulders, and that's exactly what we got, and some huge follow through. If you would have set your stop below the right shoulder here, you would have been smooth sailing for the rest of the day, and there would have been some potential upside of over 2%. And taking a look at oil on the daily, so we are seeing this long-term, so we broke out of the daily rising wedge, and now we have a downward sloping resistance line, and we can even adjust that here now. I was using the real candle bodies, but if we adjust that just a little bit, that'll give us a little bit more of a heads up. But there you go. That's the line I'd be watching. Did we top out on that line? Yes, we potentially did. And we are now in a low high, higher low, lower high, lower low, daily downtrend. Taking a look at the weekly. Weekly is going to be super important as well. You can see that once we broke out of this daily rising wedge, or this rising wedge on this weekly chart, I was watching it on the daily, but you can see here that we have a lower high, and it's all about the low of 36.15. If we lose 36.15, then this will be a weekly downtrend, and that could potentially show clues as to what SPY would potentially do, and QQQ as well. So we'll see if that has any confluence or any ripple effect into the overall market. And like I said, all eyes on that 36.15 level on oil. Take a look at oil in the end of the day, just straight up. So we didn't form any hourly trend change. So we will be expecting, you can see we got a couple of inside bars. So whichever way that breaks, we'll either be looking to continue this hourly move or potentially go down here and set an hourly higher low, which would be healthy consolidation in my opinion. Taking a look at the end of the day, 15-minute uptrend. Assume the 5 minutes in an uptrend as well. Just looking for a 5-minute higher low. A little bit of an EQ going into the end of the day. Certainly expected with the stimulus talks still up in the air and the report coming for jobs, September jobs report tomorrow. So again, I did highlight that gold and Bitcoin could potentially be a weekly descending triangle. So I will highlight that one more time on gold. So gold, we're watching this descending triangle here. So if we can get above the 1940 or 50 level, I'd actually want to see us break this previous high here at 1932, or sorry, at 1973. If we can get over 1973, then I would consider this weekly descending triangle negated, but right now, it hasn't been invalidated. We're still following this, and we could potentially see this right into the election, which would line up quite perfectly. And I'll also show you what would also line up on the charts on Amazon, Apple, and a few other individual stock tickers, big tech companies. So again, descending triangle on the weekly, taking a look at Bitcoin. Still following that pattern as well, could be a weekly descending triangle. So, and that would put us right into around the election. So definitely watching those charts. I'm not going to look at the other individual sectors as there wasn't really much to highlight. Everything kind of just followed SPY and QQQ for the most part. We did see the dollar had some weakness today. So taking a look at the dollar. So we are still looking for a daily higher low, and we could potentially have set our daily higher low. So in order to confirm that, we'll need to change the 4-hour trend. So bulls hoping for a 4-hour higher low and higher high to set that daily higher low. All about the 4-hour time frame, in my opinion. Looking into the end of the day, can see that we started to sell off and we are in a 5-minute downtrend. We'll need to set a 5-minute higher low, higher high. That'll give us confidence, and then we zoom out to the 15-minute, zoom out to the hourly, and so on. But in my opinion, the most important is going to be the 4-hour chart on DXY, the US dollar index. And taking a look at, there was something else, I lost my train of thought, but no worries. So I do want to highlight the weekly bear flags on Apple. So taking a look at the chart on the weekly, we could potentially be setting up for a weekly. And again, they've been pinning, Apple and Tesla have been at the forefront of the gain train, and they've been pinning these guys, or they've been targeting these guys to drive the market higher. And again, we see that Apple has very, very bearish indicators on the weekly. We are back above the 10-week moving average, but the MACD and the stochastic is still curling, hasn't crossed bullish yet. So if we close the week, but right now, I wouldn't be surprised to see us close back below that by the week's end. And this is why I am remaining, I'm looking at more of a macro approach and not getting too caught up on the hourlies or the short-term time frames or even the daily time frame, to be completely honest. But you can see here that we are still flirting with bear flag territory on the weekly. Taking a look at Goog on the weekly, could potentially, very, very possible that that's still a weekly bear flag if this is rejecting at EMA 12. So very, very plausible that we could potentially see this play out. And Goog is one of the weaker ones on the weekly. I did notice that we're still well below the 10-week moving average and the MACD and the stochastic cross bear a long time ago. So certainly weaker out of its peers. Taking a look at the daily on Goog, you can see we could potentially be finding resistance here at the 100-day moving average, and it's under its 200-day moving average. Taking a look at 50-day, taking a look at Apple's well above the 50. So Goog definitely standing out as one of the weaker $1 trillion club names. that was definitely notable to me, but that you can see that it's a weekly bear flag potential, and Facebook as well, still a potential weekly bear flag. So if this is all we get, if we set our weekly lower highs here, the potential of a bear flag and a weekly trend change on these mega cap tech companies increases significantly. And this is why I am staying very cautious. This is why I'm building a short position again. I had huge gains on the way down with SQQQ and SPXS. And now I'm looking to go aggressive because, like I said, we were in daily downtrends. The trend is still bearish in my opinion. And until we can form daily trend changes on most of our indices, then I will change my tune. But as of right now, I still believe that we're definitely bearish in terms of sentiment. And taking a look at Amazon and Microsoft, I highlighted this a couple of times, but again, just to continue this train of thought, we could potentially be seeing, so to go in hand with the Facebook, the Google, and the Apple weekly bear flags, we could potentially be seeing, and again, this goes back to my theory that they don't want Apple and Tesla to go back to where they were. If we just take a look at Tesla as well, you can see we're sort of bouncing around here. We got a weekly EQ, so high, low, lower, high, higher, low. And we've just been in this tightening range. So you can see here that it is tightening on Tesla. And I don't think, maybe I'm wrong, I hope I'm wrong, but I don't think they're going to let I don't think they're going to let Tesla get too far above 450, if at all. And I don't think they're going to let Apple get above 125. And the reason why I think this is because post-split, we broke 500 on Tesla. So a lot of people are still trying to break even who bought post-split. And you better believe there's a lot of people who did buy that post-split, right? So what I think they're going to do, we could potentially be topping out here on Tesla. We'll look for the hourly uptrend to be lost. If we lose the hourly uptrend, then the odds of a daily lower high being set increase. And we did have a tiny bit of a higher low here, so you could say that we changed the daily trend. Personally, I don't think that was enough of a pullback. But like I said, all we're really looking for here is a top out. So we'll be looking for the hourly chart as the most important if we lose that hourly uptrend. So again, I think they're losing steam, and I think they're making it very difficult. And then they're switching into names like Amazon and Microsoft. And I saw that Microsoft today came out with a laptop for $549 to combat the iPad Air. So a lot of people are looking for a cheaper alternative. They're looking for computers to work from home since of everything that's going on in light of everything that's happened. I think that's a smart move. And we're starting to see funds switch over into Amazon. You can see Amazon was up over 2% today. Taking a look at Microsoft, 1%. So again, I think we see some rotation from those names into Amazon because they're far away from their highs, from their recent highs. And Apple and Tesla are pretty much right there. So we did hit a high of about 35, 36 on Amazon. So what I could potentially see is this weekly head and shoulders playing out, and we're getting very close to the right shoulder resistance. And we are seeing volume drop off a little bit here into the end of the week, not even at the 20 volume average. So we'll look earnings at the end of the month on the 22nd. So all the big cap companies have earnings coming up the 29th for Apple. So pretty much all major tech names are going to report at the end of the month. We'll just take a quick peek at Tesla on the 27th. So I would like to potentially see, this is going to be a very interesting month with the election. We have the debate next week with Kamala and Mike Pence, and we have another debate, if there is one, with Trump and Biden. So it's going to be very, very interesting. We're going to have the turbulence from the election. We're going to have earnings from big tech. It's going to be a potential second wave. So it's going to be a very, very interesting month. And then the election right at the beginning of October. And just to top things off, there could be an asteroid heading to Earth the day before the election. So I don't know if you could have a more jam-packed month, in my opinion, and it's going to be fireworks. I am sure of it. So make sure you get the popcorn and you're ready, because you need to be ready in these markets. This is some of the wildest trading I've ever seen. And just highlighting the weekly chart here on Microsoft before I lose my train of thought as we wrap up, you can see that we have a potentially weekly head and shoulders forming on Microsoft as well. So again, seeing a lot of confluence there, seeing a lot of signs pointing to some more bearish downside. And like I said, October hasn't always been the greenest month, and two of the worst crashes in history were in October. We could potentially be setting a second wave. We're seeing layoffs. We're seeing lack of stimulus. It's going to get interesting. Let me know in the comments below what your game plan is. If you are prepared, or if you're just basically sitting on the sidelines, let me know in the comments below. I'd be interested to hear from you. And make sure that you always have a stop loss. I can't reiterate enough. I said this in the group today multiple times, that you need to have a stop loss. And even if it's for 30 minutes, I don't care. You need to always have a stop loss on every trade. So with that, everyone, it is Rod again with POW Group. Thanks again for joining us on The Pursuit of Wealth for another daily market recap, and we'll see you tomorrow.